Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So it is Wednesday, and it was definitely an interesting day. Futures were lower to start, based on the fact that there was no Greece deal to kind of kick the morning off, and you had the DAX down like 1%. And I think a lot of guys, including me, I came in with 7-8 longs saying, okay, what am I going to do here? Can I work my way out of some of these positions? Can I add to them for some type of powerful move? You know, can we hold higher? Is the momentum going to be pent up, or are we going to be back into this range-bound chop fest? So there was a lot of question marks, and what you have to do is be prepared on how to navigate. And I would say at least the market didn't trap everyone. Okay, there was movement in the first hour where you could have made money, you could have got out, you could have got short, you could have done a lot of things, you know. But that's all you can ask for is you know, the ability to put yourself in a position to make things happen. So with all that said, let's quickly go to the chart of here's your SPX. So a little bit of lost in between time frames, right? This was the lows of the beginning of the year that held before we went higher. This is when we were holding in here around 2055. This was your 2070, and then this was last week. We had that double bottom, and then we crossed above this spot here to get towards highs. Ran out of a little bit of gas, and it doesn't look so bad, right? That doesn't look so bad. But you have a potent down day, and in the morning we talked about you could use just say this 2119 as a stop. So if you were really super tight, you could have got out of your longs right there, and some people might have even got short, especially when that the Carl Icahn news hit. And a lot of names lost momentum, including Netflix, which we'll get to. So if you were playing, the stock market to hold this area for a potential move to highs very quick, today you had to lighten up a little bit on your risk because of this type of bar. Doesn't mean it's the end of the world, but it's just something that I do, which hasn't really been great for me to do. So, look here at the spiders. This was that spot that we isolated also. This was your 211.57. That was your 2-day range. We broke below, and now we broke below the 8 and 21 day. So that's why I typically reduce risk when you lose the 8 and 21 day. Here is when I tried to put it on. Okay, on this day, stay with it. And then this was Friday, and now it seems as if we're right into this spot. So a down close hasn't really related to a big down open. Like here, if you went out, heavy short, you had to deal with this, okay? And if you got stopped out of longs here, you had to figure out how to get in. So it's pretty choppy, I would have to say. So here is a bigger level underneath. This is 209.50, which is only about $1 away. So tomorrow, what you should look for, you write down is 210.47. Here's 210.36. Maybe tomorrow you get some kind of red dog reversal around this, and then with more time, we have a sideways wedge or not. At this point, tomorrow's open is a coin toss. Back in the olden days, you get a close in the lows, things go out there, momentum traders pile in, you get a down open. Now it seems like you get an up open. So you can't just buy a first day down because that's been the case, because that kind of goes against the momentum rules. Same way, it hasn't been great to, on a strong close, go out with 7 or 8 positions because we get no follow-through. And that's the frustration here, is that very limited follow-through across the board. So let's real quickly just go to some sectors. Look at the IBB. At least, in our school of trading, so to speak, we have a system, right, where day one, you try and buy a breakout. And this was even like day 4, to be honest, but these were small little bars. So this was day 1 out, and that was clearing, this prior high. So this was your, get really long, maybe take home a third, and then you had an inside day, some follow through, and then a little bit more. So after 1, 2, 3, 4, 5, 6, 7 green days, I don't think anyone in technical trading land, even though people want to call technicians or guys that trade actively chart chasers, no one's chasing this chart up here. You're buying it with size here, maybe you're holding here, and on this you have a trailer. So with that said, this down move was probably welcome because I want to buy back some bios. So the question is, when you get one day that kind of engulfs 3 with some power, do you want to be a buyer, so close? Do you want to like just say I'm buying in the first down day when, sometimes you can get more and you don't really know what's next here. So, I didn't, buy into this down move. Tomorrow you'll look to see if you get a red dog reversal around 376.56. This was that inside day low here, 375, but you're still very extended from the 21 day. So that's why I think being patient is key, or wait for tomorrow's data. If you're still in a third from up here, if you had like tier 2 or some whatever, and you had a third and you're giving it some time, that's cool. Because recently there hasn't been much more than this in a down move. So if you're not buying day 1, you're not really getting good prices. But I guess I'd rather be risk averse. Plus I'm leaving out of town today, which I'll get into. The Russell, same kind of thing. This was your breakout day, inside day, 3 days of upside, and that was after where it came from here. And now this was your first potent down move that took out this low, which could have been your stop. You had a chance to get out of it, and now it's just getting to the 8 day. And the 21 day, which it's held, for the majority of this, of this year, is a lot lower. So you don't know if it's going to get there. Because I'll show you a few stocks, like FEYE, very strong stock, lots of momentum points to buy, got extended, gave us a topping tail early in the week. Those people said, I'm just going to buy the 8 day because the 8 day has been the trend. They probably got, pushed out of the way, because right here on the 8 day, 3 down days, maybe you tried a little bit. First of all, thank goodness for this topping tail. A lot of people got out here, and some people maybe even went short when it went below the low, but didn't really hold the 8 day. This has been the trend. This bar definitely looks a lot different than any since it broke out here in May. So still skepticism, and then you had an inside day, and then pow, back to the 21 days. So here, some people might have went a little long, and that makes a little bit more sense to try. Because even if the bears were saying this is a head and shoulders top, typically you get some kind of bounce back to make a right shoulder. So buying in here makes a little bit of sense. But ultimately, the trend has changed somewhat. From the breakout of right here and staying really pent up, and here got stretched away from the 8 day. Same way this got stretched away from the 8 day. So I'm sure some people were light. Here it went sideways into it. Here it broke through it. So it's something a little different. CYBR, kind of the same thing, where you had your outside day here. This was a small outside day where it tried to break out and failed. Then it seemed as if it was going to try and hold this prior breakout going sideways. Then you had another faulty day. So all of a sudden, you look at this, little flag here, which is kind of getting choppy. Choppy action sometimes doesn't lead to great action, and so a little bit of a clue that the 8 day might not hold. And then today we closed a little bit below it. So I think if you're trying to be patient and a little bit more precise, maybe you get a buyable move into the 68 area, and then that needs to hold. Otherwise, things get choppier and change. There are some times when things are tight and they go up for 2-3 days, and then they digest for a day or two very tight, and they go up again and put high-level flags. And then there's times when, things get looser and they let the shorts out, and you have to figure out where you could buy it in a way that makes you comfortable. So, after today's action, I think it just created a little bit more choppiness versus, being in a rush that things are going to run away to new highs on you. So let's go to some stocks. First of all, I came along Amazon, and Amazon did what Amazon does. That sounds like Forrest Gump, but where on this day I remember being very long, and then kind of fell there. Inside day, then yesterday you had a nice day, and all in all, it's still it's still very close to highs here, but you're not getting much continuity. So there was a way to, when it went green, to get out of some, which is what I tried to do. And it's still above the 8 day and the 21 day, but the 8 day is all the way down here at 436. So you want to give it another 4 points, okay. And if for some reason it doesn't hold, it is what it is. For me, I'm not good with Amazon. I made good money there yesterday, and today I get out, pretty well versus what it could have been. They put a little fear in me when Netflix, which announced its split, and then after Icon had a big reversal day. So if this doesn't hold tomorrow, there's a chance that this trend of the 8 day could be in jeopardy, because a lot of people said, oh, if Icon's selling, maybe I'll sell. And when that news hit, there was a lot of volatility. And that was pretty much when you had to make decisions on other longs. What do you want to do? Do you want to be long? Do you want to be short? Do you want to just get out of some stuff? And some guys, shorted it quickly and then went back and forth for a little while. But I want to show you how, there was, a pretty calculated short here, or at least a way to get out of your longs. If you go to the 5-minute chart, the news happened here, okay? So it was trending along, boom, okay? And I do remember, okay, a lot of guys started to short it here, and and then all of a sudden, like, well, if it doesn't go down, maybe it'll squeeze. Let's see if it holds half of this wide range bar, which was 700, and then I think Sperling actually even got short right here, into this, and I remember it was like hovering into 692. I was like, if you want to be short, be short 695. I think was right around there. I'm like verse 700, and if it breaks this 692, you might have a good trade, and then. It came in and you had your first move down, $4 or $5, and then I think it even came back, retested that 693 again. So if you had your short here and said, I'm going to put my stop there, then all of a sudden you got really paid. Wound up going red and continued lower. And if you were long this and you had this first move and then it bounced back and you're like, I don't care, who cares, whatever his name is. Guy from the Mavericks. I'm brain dead right now. Like 5 pictures with the guy. Anyway, he's still in it, and the guy from BTIG says 900. I'm not getting out of it just because Carl sold. This happened and that happened. You could have used this as your stop to get out of long, and then you get to figure out tomorrow what's next. But ultimately, we'll see what happens with this trend. And when this happened and it gave way, all of a sudden the shorts, it felt like got a little bit more confident. That even if like Amazon announced a 7-for-1, doesn't mean it has to go up that day. It's going to trade, and then you had to move in Apple. Apple was fast and furious. If you remember, in the morning call, I'm like, look at this wedge. I go, there are 2 spots that Apple needs to get above to act better. One was like 127.60, one was 128.30. That's just out of my head, and it went quick, and then came in a lot more than I would have thought. Still looks okay, but just. So annoying, actually, to be honest. So the reason why I had those 2 levels, just so you know ahead of time, just to show you how I prepare myself. This was yesterday's high, right? 127.61, and then here was your 128.06, and this was 128.30. So within the first 10 minutes, it went. So I got long right here. I added there, and I actually sold some 129.30s. Okay, because I didn't think it would get up here so quick, and then we all bled a little lower as it didn't really find the bid that the whole way down. So in the first 5 minutes, okay, you had to be really quick. And sometimes people are like, Redler, how do you act so quickly? I'm like, because I'm prepared, and I was waiting to see if Apple got above 127.60, which it did, and then once it cleared 128.30, which was another level, you had some follow through. So. Into this area, I tweeted, I'm like, I sold some into 129.30. I'm going to hold some. Okay, so if you look at a high-level flag, okay, to see whether or not you get continuation, here was basically, could it have held this 129 and change and continued above the morning high and gave you a follow-through? Yes. But what happened? It broke right there. So if you bought here and you bought here and you sold into that, and at tier 1, I actually held my tier 1 to around there. Okay, and then I think it bounced up a little bit, and then I said to myself, you know what, if Apple's any good, it should at least hold here. Okay, moving sideways. So that's where I put my stop, because once it broke below that, I'm like, you know what, it's just not that good. And then it came back up, went sideways, and then boom. On that move, I got out right around 128.80 because it broke this prior pivot and gave back more than it should have to be strong. So anyway, wound up closing, all the way down here. But that's kind of how you have to navigate. So when you're not sure what's going on, even so, if you missed that exit, okay, with this pivot low, that had to be your exit. And if you said, okay, Apple is still not that strong, I don't care what Icon says, this could be a one-day wonder, that was your spot to potentially get short. Or here, when it went below it and stayed below it. And now, I guess we'll see what happens tomorrow. I was going to take some home long because I'm like, you know what, probably there's going to be Wall Street Journal is going to give a little blurb about Carl Icahn saying the market's vulnerable and I'm done with Netflix, but I love Apple. Kind of weird if you're saying the market can correct 5 to 7% or more. Apple, even though it's strong, probably comes in also unless it becomes a defense stock, which it sometimes does. Sometimes money hides in there, but we'll see. So if you're long a little Apple still, it makes a little sense because, who knows? We've closed on the lows and the futures opened up, and then you'll be paid that way. If, we open up down, chances are one of the first things people might go to is Apple because it was strong today. That's one of the rules. You go to the strongest stock the day prior, into a down move. Same way if you're up and you short something and closed on the lows, you usually short something that was the weakest that might be just up with the futures, but that's a whole different set of rules. Facebook, defied some gravity, closed real strong. That gave you a nice trade. Some guys bought it when it was down 30 cents. Down 30 cents right there. You could have bought it when it took out this high and gave you a nice dollar, some nice continuation. That's good to see. Still well above here. But 1, 2, 3 days on top of this. This was your buy spot. Here is where your secondary buy spot, and now you trim and trail. But it did buck the weakness today, and seems as if, why not 90 plus? I would have thought that it could have a doji today or whatnot. If you sold today, that's fine too. You caught a nice trade. It's not really helping other social media names. LinkedIn still can't find a friend or connect with a friend. Sorry for the pun. But I'm out of it, and I was going to buy a little bit and hold it while I leave for Denver, and because I'm not going to be around if it does trigger into this, but just not worth it right now. If it happens, it happens. Maybe I'll put a buy stop in in trade support. Twitter, hung around, still kind of out of play. Some guys are playing it for these little spurts, but ultimately still out of play. I just said that, didn't I? But if you have it from this red dog reversal, it's still trying to hold right there. If it does a little bit more, maybe something exciting happens, but shouldn't be your over focus. What did Google do today? Google still hanging out, still holding above the recent channel it broke above. It's still above the moving averages, so I would say it's still kind of in the game, just the way the market is, which is kind of in the game for momentum. So it's something that could be there. I think some guys are actually shorting Baba today, which is kind of funny. Not really funny, but people like, how come you haven't traded Baba in a while? I'm like, because Baba lost its momentum right here. It was a nice trade here, gap up after earnings. Here is when it went, small red dog reversal there, came in. You would have thought it might have been able to regroup, but then on this day it broke, and it's become nonsense ever since. And now it seems like it wants to break into this area, but I know some guys who were shorting this pivot here at 84, 83 probably weren't happy as it bounced back up. So at some point maybe it crosses there and gets a little bit better, but at this point it's just kind of on the wait and see, and don't get baited in, because a lot of guys are buying the strength and shorting the weakness, and nothing's really going on there. The banks, Goldman Sachs, another situation. Everyone was crying about Goldman Sachs today on TV, but you look at where Goldman Sachs came from. This was your buyable breakout. This was another actual spot. And then look where it was before today. Look how extended, just for a rule to write down, from the 8-day. Not from the 21, not from the 50, not from down here, not from this breakout, not from this breakout. So chances are, if you're a trader, you should be only in a tier 1. If anything, this was a spot to add, a tier for, this was your sideways consolidation, broke above, and then you sold some here, maybe you had a little bit of a trailer on into the downgrade, and now it came into the 8-day, which it's been holding. So if you happen to buy it today, okay, you're coming in quick, which you've had to do during this bank rally, but there's still a chance that if we do get some downside pressure, the 21-day would be a spot where it could still be deemed strong. And some might think that this potent down day, engulfed these two bars, and it has more precedent over the short-term action, but we'll see. It was downgrade. I wouldn't buy the first down day here. Maybe tomorrow you get a red dog reversal around this pivot, and then it tries to build, but we'll see there too. Citigroup, I also was long overnight, and I had to salvage a trade, which was good, and now it's kind of below the 8-day and a little choppier, and this has been choppy as it is anyway. Also was long Morgan, which I got out quick, thank goodness, after that outside day. So just so here's the thing, something I do also sometimes when there's volatility. I was long Citigroup and Morgan, and Goldman and Citi were the downgrades. So Goldman was down like $3, Citigroup was down 75 cents, and in the first 15, 20 minutes, Morgan was only down 20 cents. So I'm like, if Goldman and Citi are going to be that weak, I know Morgan wasn't downgraded. After a move like this, let me just salvage the trade and get away from it, just in case. So, you look at the first 5 minutes of it, you had some time. Actually, it opened up lower, went green, and then I said if it breaks, what's it called, this level, in my head, I'm going to get out of it, 40.10-ish. So that was my spot to get out. And, it actually went green for a second, and then I was like, and I didn't see anything else bouncing, so I was like, I'm going to get out here and revisit. So whatever that was, it saved you 50 cents or so, which could be a lot depending on your share size or not, just the right thing to do. So anyway, if you're in a stock that's near highs and it's been trending and this has been really choppy, why not salvage it? And then it did take out the prior day's low of 39.90. You could have waited for that, and now it's on the 8-day, and this has touched the 21-day many times. So if you were waiting to buy Morgan, that probably would be a better spot, or maybe you get a red dog reversal tomorrow. What did oil do? Oil still in this range, a little bit choppy. A lot of people were saying how the IYT is now a problem again, which, I kind of agree. I don't know if it's a problem, but it's a problem if you're long it. You now have a, when it seems like when it bounces off the lows and it heads back up, people stop talking about it, but it's still never reclaimed the 200-day. It's below all the moving average. It's not a hold, it's just a trade. And now, it just engulfed back down here. There'll be headlines all over if it breaks this on how weak the IYT is and how bad that is for the overall market. And it's been in a downtrend since, but kind of like, remember last year when every time oil broke thresholds, it was horrendous for the market, and then it would bounce a little bit away from the threshold lows, and then people would stop talking about it, the market would bounce, things would be fine, and then all of a sudden oil went back and made a new low. Then all of a sudden it was the headlines again, market's down because of lower oil, market's up because of lower oil. That was all last year's headlines. But anyway, every time the transports have made new lows or got to new lows, it creates some headlines and makes people think, what does it mean? So we're back at that area, so people are thinking about, what does it mean? Does it mean the Dow is going to follow, or does it mean it's just a weak sector and money's being put in other areas, which it has been, like the bios and the Russell and some banks and even some tech. So now we'll see what's next. With all that said, I am going to Denver. I'm going to post on Twitter a registration link if you want to go virtually. It's tomorrow. I think that it's going to be 5:30 Mountain Time, where I'm on a panel talking about the market with some of their guys, with Amanda Drury from CNBC, who I met in Asia, when I was on that show hosting late night, which I'll be back next week on that. And it should be interesting. If you can't get there, which I think it's a very limited audience anyway, it's only their select, you could watch and listen virtually, which is the beauty of technology, even though I'm not that great at technology. I could trade it, but anyway, so I'll post a link. So I won't be here tomorrow to do the morning call. I think Robin the Black will be doing it, and I will pretty much be checking in on Twitter from time to time. So if you're on the VTF, I'll go into the main Twitter, so that gets listed. If you're on Redler All Access, I will be writing my note tomorrow. It might be a little bit smaller, and then again on Friday, which is the limited version. So I'm going to try and do my best to stay in the loop and keep everyone in the loop. But at this point, if you see on the virtual trading floor, today I sold some strength, I got stopped out of some names, and I'm back to neutral to positive. Not really neutral to negative, but neutral to positive. But I think that, I don't know what tomorrow is going to bring, and if it's going to bring it down open, I'd rather be away in Denver flexible, where I could, buy into some weakness and then at least have a better start to the day versus, being in the red in pain. Or if we open up, just maybe avoid and say, I'll revisit when I'm back in my seat, and that won't be till Monday. So at this point, going back to the SPX, really didn't break, okay, but some momentum has been lost right here. So tomorrow, I guess the best case scenario would be maybe even like a down open into here, where we get some kind of red dog reversal. My drawing is crooked. Into it, and then we build a little bit sideways here for then what could be, a better move, almost like what happened here. Here, you had to move and then a little sideways action before going again. I'm trying to think where, I always try and look at like previous data to think about, or maybe, or this could be similar. This was your boom, 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 going up. So all in all, it still looks fine, except that you might not need to be in a rush and we can get more clarity. And I probably said with that said a few times, but I'll say it again. With that said, it's Wednesday, it's summertime. If you're not seeing it, do a little less. If you're making money, make sure you're quick. If you're giving things more room, that's okay too. That seems like the way to go. Over trading though and overdoing it has not been the way to go. And being flexible with a predetermined plan with levels and waiting for the market to confirm it has been even better. Have a great night. I will see you back here Monday, and I will be in touch on time to time, via Twitter. Bye-bye.